All right, Ren. Well, I said at the top, we've got a new segment called Mr. Beat Up. Stocks are down, but not out.
Yes.
And that's this point in the show, a new segment.
Well, we've got to welcome Mr. Beat Up to the studio.
Good morning, gentlemen.
Are we sharing your real name, Mr. Beat Up? Or
Sure.
Okay.
Sure.
So this is Simon, who works with us, who just tells us over and over again in the office when stocks are down and when he's buying them.
That's
and
right.
Seems to have made a bit of a habit of buying these beat up stocks.
Well, yeah, I only tell you about the winners. But, I go on about this a lot in the office. You guys said, well, stop talking about it downstairs. Come up.
Yes.
Tell the audience what you're thinking.
Yes.
Let's have a chat about it. So
So
here we are.
So I think to start with, let's talk about what you're looking for with the beat up stocks, what we're talking about here. And then let's establish your bona fides with some of the beat up stocks that you've caught on the way back.
Yeah, definitely. So I do have a bit of a criteria. There's a few things generally I like to look for. First of all, obviously the stock needs to be down significantly. So probably 30 to 50, even more % is good. Negative media attention, maybe leadership issues, maybe some regulatory scrutiny, maybe some investment decisions, mistakes, some change in strategy people aren't liking, and also financial results maybe missing expectations. But I guess crucially, thinking the market's overreacted to these short-term issues and the stock price is now not accurately reflecting the long-term potential of the company.
Makes
Nice.
sense.
Nice.
So what are some of the names that are in your portfolio?
Well, yeah, some that we've talked about a lot in the office. Obvious one, probably Netflix. You know, a couple of years ago, lost users for the first quarter ever due to the Russia exit. Also introduced the password strategy clampdown. Market panicked a bit.
Yeah, so I think it lost 70% between the end of 2021 and the start of 2022 for both those reasons.
No. In the end of 2022?
No, like end of 2021 and start of 2022.
Oh.
Like in like a matter of months, it dropped like 70%.
Yeah, right. Okay.
Yeah. And because of those two reasons, the big one was firstly Russia. They said for the first time ever, our subscriber base has gone backwards. And yeah, the second was the password crackdown.
Yeah.
And it just serious overreaction from the market.
Yeah, you're right. It was in like 6 months.
Yeah, just boom.
And that's when
So-
Mr. Beat Up
Mr. Beat Up started circling.
Yeah, well, I think with that one, I just thought the thesis for me was the password crackdown. You know, if you're borrowing someone's password, the person's password you're using, they're not going to cancel if you're not getting in anymore. What's probably going to happen? You're going to have to get your own account. I don't think there's many people who like divvied up their monthly subscription. People were just, you know,
Just
using
sharing.
their family members.
Yeah.
So that was the thesis, and it kind of, I guess, it played out and skyrocketed about 250%.
And so then the second, probably more recent one has been Meta.
Meta, yeah, we love Meta, Alec, don't we?
We do.
Yeah, so you remember a couple of years ago, so much negative sentiment against Zuckerberg, Meta. They're kind of metaverse bets, if you like, and there was a lot of regulatory scrutiny going on at the time. But I guess the reality was half of the world's population was using their apps, and they still had 5 of the 10 most downloaded apps in the world, making a ton of profit. And they lost 700 billion of their market cap during that period. Price to earnings fell below 10. And since the stock's back up over 400%.
Yeah.
So
And you did get in on that.
the few in the office got in that. We did.
Yes.
We got lucky about
I think
timing
it was
there.
just you and I, wasn't it? And
Oh,
then
it was
Alf and Bryce
That's right,
just
yeah.
looked on from the sidelines.
Yeah.
Well, let me bring up something here. Let me bring up something. Simon also nicely reminded me of this, and we have this on tape, and we'll play it in a second. But Ren and I have a bet.
I actually knew this was coming. Yeah.
Ren and I had a bet ages ago it was at this point in time where they'd reported and they'd been smashed, and the argument was they still had 1 billion people on their platform. And our bet was that I thought it would hit a $1 trillion valuation, and you thought it would never get there.
And when the facts changed, my opinion did, and I put my money where my mouth was.
Just so I can lap this up.
The context here is Bryce and I have a bet He reckons Meta will break through the $1 trillion mark. I don't think they ever will. So
Okay.
there's a little bit of vested interest here. In,
I mean, it seems like
us.
every company is now worth more than $1 trillion,
Yeah.
right? So
Honestly, Equity Mates is raising at $1 trillion.
there you go. There you go.
Look, happy to admit I was wrong about that. In fact, I'm glad to admit I was wrong about that because it has come roaring back. It's now 1.2 trillion.
Yes.
How did you not put...
I don't know.
If you're making that bet...
I know. I've done that plenty of times on
my
this show. I've done that plenty. I've done that so many times on the show.
Well,
Anyway.
That's why we got Mr. Beat up to
Yes,
make sure
yes,
we're keeping an eye
yes.
on the stocks that are beaten down. So you've spoken about Netflix and Meta. You've got a company that you want to bring us today, and I'm sure it's going to be Boeing.
Close.
Oh,
They were in the
actually.
top 3.
Really?
We had Boeing. I also looked at Woolworths, another one,
Yeah.
probably most hated CEO in Australia at the moment. But my number one here today, don't miss this one, Bryce.
No, not advice.
it's not.
Not financial advice. Tesla.
Okay, all right. So the point of this episode, the segment going forward is Simon will bring the stocks. So you've bought Tesla today. So if you can go through the above criteria that you spoke through, maybe some of the major ones that have led to the beat up, and then why we think it's overdone.
Yeah, definitely. So I actually wish I'd come in a month ago when we were first chatting about this in the office, because it's actually up 25% since then. But zoom out a bit, it's still down over 50% against all-time highs.
Okay.
Negative media attention. I mean, come on, Musk, he's at war with traditional media. I think it's fair to say they are pretty obsessed with him as well. I think, Alec, you put a post up on our Instagram recently that Bloomberg Business Week, 18 out of the last 20 or 20.
18 of the last 30.
18 of the last 30 posts were about Elon Musk.
Elon Musk, yeah.
And I think generally they love piling onto him at a hint of an issue. Probably the best example is every time Tesla do an over-the-air software update, like you might get on your phone, the media generally frame that as a safety recall, where you're thinking about cars going back to the garage, but it's generally just like a small software change most of the time. Although the Cybertrucks did
I know.
get
I didn't want to interrupt, but they have had a physical recall of every Cybertruck.
Yeah, the 4,000 first Cybertrucks got called back. So definitely some media negative sentiment. Leadership issues, again, I mean, there's lots of talk how distracted Musk is, his other endeavors on X, like everything going on with Musk, big distraction.
Yeah, his $50 billion pay packet that he's trying to get through.
What were your thoughts on
Corporate governance?
Let's not get bogged down. I mean, really quickly, I think my thoughts are it's an outrageous thing when you read it in the headline, but when you actually look at the story a little bit closer, it's not as outrageous. It was like performance shares that he was promised, and then he hit all the performance milestones.
Yeah.
And so it's a bit like now they're retrospectively taking it.
Yeah, I don't really know where I stand with it either, but I can see both sides for sure.
It's an ungodly amount of money, but it's like there was a deal in place.
There was a deal, yeah. I guess then changes in strategy. They've made their first ever price cuts to the Model Y cars and Model 3 cars. That spooked investors a bit. Cut 10% of the workforce, and they actually missed expectations. Sales growth slowing, deliveries year on year fell. It's fair to say it's been beaten up a bit.
Yeah.
So here's the question, like, because the obvious thesis that you can draw from a lot of those things is that they're losing their shine of like a crazy tech company and getting into the reality of being a low margin, high capital cost car company.
Yeah.
But
So,
you're saying that the market's wrong.
look, there's a lot of experts who are still bullish on the electric vehicles business.
Yes.
There's a lot who are saying they're now a car company. Where I'm coming from this is actually I see the most game changing outside their core electric vehicle businesses.
Okay.
So whatever your thoughts are on the electric vehicle business,
Park it.
park it.
Pun intended.
And really, it comes down to the size of the problem for humanity as a whole that this could solve if they get it right.
Okay.
So before revealing what it is, I'll start by giving you some stats just to tee it up. And these are from the World Health Organization at the end of last year.
Yeah.
So approximately 1.2 million people die each year in road traffic accidents. And another 20 to 50 million suffer non-fatal injuries and often permanent long-term disabilities. This one really shocked me. Road traffic injuries are the leading cause of death for children and young adults between 5 and 29 years old. And it costs most countries 3% of their gross domestic product. Okay, so it's a huge problem. Agreed?
Yeah, it's
I know where you're going, and I'm not
reasonable.
sure I agree, but yeah, keep going.
So the solution, self-driving technology could drastically improve road safety. So it's not where it needs to be yet, but experts are saying it's going to be at least 10 times safer than humans at driving. And Tesla is the best placed company in the world right now to lead in that space, and it comes down to the data they have. So for years, every Tesla on the road's got cameras. It's been a data point feeding into, think like a massive brain, which is getting better and better at self-driving with the more cars they have and the more miles those cars are doing. And competitors are just no way near Tesla for that data collection. So they've got people call it a data moat, or you think of a huge network effect, and it's just snowballing on itself. It's like Google, really. Google's got more search data than everyone else. People use Google, it gets better, it feeds on itself. No one's going to now use an alternative to Google, and that's where Tesla are trying to get with this autonomous vehicle data or self-driving data.
I've got to say, the Tesla's thesis is different to the other two theses. The other two theses were the business hasn't changed, but the market has overreacted to the future of that business. Netflix is still Netflix, Meta is still Meta. But this is there's a fundamentally new business line and a new technology. It's not like an overreaction play. It's a new thing.
Yeah, I guess it's the long-term business where it's heading all along the play, I think from Musk has been saying it for years, is to get to these electric vehicles full self-driving, and another aspect of that, which I'll come on to in a second. So I think people are just getting too hung up on the short-term noise of the core business. So
Nice. Okay.
All right, we'll get on to your second point, because I've got a little rebuttal that I want to get into.
nice. So yeah, I think they're well placed to solve this issue for humanity, and there's two monetization methods from that. One is obviously software subscriptions, which they're actually doing at the moment, $100 a month in the US, full self-driving. They're actually making hundreds of millions on this already. So it's really happening at a small scale, and that's going to keep growing. The second one, and this is where some people are getting really excited, is Robo taxis. So think Uber, but without their largest cost, drivers. And this is what you get. And Tesla are actually revealing their purpose-built robotaxi in August this year. And they've said that millions of their Teslas could actually be converted overnight into ride-sharing vehicles. So probably one of the most underutilized assets in the world is a car. It sits there not being used most of the time. Now you can send it out when you're at work and earn money for you.
If people believe the part of the thesis that Tesla will be the first to deliver self-driving, almost nothing else matters. They will be a multi-trillion-dollar company. If they truly can do that, and Waymo and GM and everyone can't do it soon after them. But the question is for me, since we've got interested in investing, self-driving has always been 5 years away. Yeah. It's always been almost there. And for every step forward, there's steps back. This is GM's self-driving division. They were on the road, and now they're off the road because there's been some pretty terrible accidents. Tesla takes a step forward, and then the National Transport Safety Authority tells them to pull it back because it's unsafe or they didn't get approval. Waymo rolls out to a city, but it seems like their technology isn't super scalable.
Yeah, 100%.
Yeah.
100%. I remember when I was in the UK in Milton Keynes, I was working, they were doing tests 6 years ago, and it was this is going to be out in 2 or 3 years. It just hasn't happened. I personally think it's going to be something which is going to be slow until it happens, until it's proven and the data starts showing how many lives are being saved, and then everyone's going to want to try and make it happen really quickly. So I think it's going to be a tipping point where they nail it and can prove, and then it's going to happen quickly. But when that tipping point comes, who knows?
But what you're saying is the opportunity of the 50% drawdown on the Tesla stock price is an interesting point.
If you believe in this, you want to get in Tesla at some point.
Yeah.
Is this the time?
Yeah.
Is it the time?
Sounds like it was a month ago.
Look, this may not be a ringing endorsement for some, But ARK Invest have
Okay,
I've got to give you information here. ARK
Don't shoot the
Invest,
messenger.
they have a price target of $2,000.
They also have a price target on Bitcoin of 1.5 million.
Yeah.
We might be coming back to this episode in
We
5
might
years'
be.
time.
Well, let's note this episode down. 27th of May release.
So the flip side of Tesla is right now it has like a 15% profit margin. Traditional automakers sort of sit around like a 5% profit margin. So if its margin comes back to the pack, it could sell 3 times as many cars and still be making the same profit it does today. But the other part of Tesla is it currently trades on a price to earnings of 46. Here's a few of its peers. BMW's PE of 6, GM 5, Ford 12, Toyota 9, Porsche 3, Volkswagen 4. So you could see a world where it sells 10, 20 times more cars, but its profit margin comes into the midpoint of the car makers, and its PE comes down to the midpoint of those car makers, and its share price doesn't move.
Yeah.
And so I lost my last bet that Meta is never going to be a $1 trillion company. Tesla is not going to be a $1 trillion company. Nah, look, if it gets self-driving right, I could say it.
No, you're spot on. I think if it can't break out of just being a car company, spot on. But if you believe it can do some of this other stuff and other stuff beyond that, which we haven't even talked about, battery storage, robotics, insurance, they've got a track record of innovating and beating the market's expectations, apart from this quarter.
All right.
Nice.
Well, watch
I like
space.
this segment. Yes. Thank you, Mr. Beat Up. I think firstly, if you have a company that you think is down but not out and you would like Mr. Beat Up to have a look at it, let us know, equitymates.com/contact. But similarly, Mr. Beat Up or Simon will be back when the moment is right for his next one.
Yeah. I think the beauty of this segment will be Simon can run his eye over it and say, oh, this is interesting, or this is a falling knife and you don't want to catch this one. It's just going to keep falling down.
100%.
Yeah, like
Yeah.
Woolies, keep falling down.
Impossible